Welcome back to AGWEEK TV. Marketing the 2019 crop was interesting, especially this fall with the disconnect between the cash market and the futures market. So what is the best way to approach marketing in 2020? Randy Martinson and DuWayne Bosse are back in with their insight. And let's talk about this, guys. Why the disconnect between the cash and the futures? Cash basis levels historically strong going into harvest and through the end of the year for corn, soybeans, and wheat.
For wheat, I think it's a local demand issue or a milling demand issue. We are seeing a little bit of export demand, especially in soybeans going, because China's back in buying. So I think that's some of what we're seeing. And also, we've got slow marketing for corn. And I think it's an incentive to try to get farmers or producers to move corn.
Or DuWayne, is it because the crop just isn't there?
That was going to be my answer exactly. That's what the basis screams, is that last year the old crop size just was not there. We came up with stories like, well, farmers are just holding it tightly. I'm like, I remember stories a couple of years ago, farmers didn't have enough money to keep the crop. They had to plant beans because they couldn't afford to plant corn. And now all of a sudden they can store corn for a year and a half. I don't think that was it. I think the old crop is just, I think USDA's estimate is just too high on it. And I think that's what the basis was saying. And we'll find that out in the quarterly stocks report.
So what's the marketing strategy here now? How do you take advantage of this strong basis level that you have locally and then leave yourself some upside in case we do get a nice rally here with better demand, maybe some weather problems?
I guess for me, looking forward in 2020 with our marketing plans, because it's just like what Randy said in the previous segment, if we get the crop planted and the weather's okay, ending stocks look very high and prices look low. So, but I'm bullish because of all the unknowns we have out there, and plus we still have to get it planted and need the decent weather. So what I'm doing is I set up those targets. Let's go ahead and sell futures here or cash. But like Randy said, because we're so worried about whether we'll get the crop planted or not, we're not going to sell in the spring when we get the rally. I like buying the short-dated new crop call options. For soybeans, I'm buying the Junes. I think that'll be enough time. And for corn, I'm buying the July and August. Now, those are short-dated new crops, so they go off the new crop futures, but they expired in the middle of summer, so they're cheaper. You can kind of almost call them courage calls. The courage to be able to sell when we get to your targets, because really at the end it's still about making money.
So Randy, same recommendations that you have, and does that include wheat?
It does. A lot of guys, like DuWayne said, nobody's really interested in doing future fixed contracts because we don't know what we're going to raise or what we're going to plant. So I'll look at doing some puts, and I do like the idea, if you do some cash, cover it with those short dated. I mean, that is a good idea, especially to pull down some of that premium in buying the options. Also, for old crop, there is some basis fixed contracts. Basis are good now. I'm telling guys, move it against that. The March is fairly decent. I mean, short term right now, we can get the product into the system for cash right away after the first of the year. But I really want ownership through that January report, just in case that gets to be friendly, and especially once we get to know a little more specifics for that China trade deal.
All right. Well, we are hoping for a much better marketing year in 2020. Thanks for joining us, DuWayne and Randy.